Welcome back to another edition of Spin-Off Investing Simplified's Special Situations Investing on YouTube. This is your host, Greg Miller, and I wanted to let you know that today I'm talking about a post-tender transaction with Brookfield Property Partners Limited Partnership. That's a mouthful, but we're going to spend some time. It's my post-mortem on that particular one. I know I did not do an original one on this one. Things got a little bit out of hand with all the different tender offers that have happened over the past couple of months. So check it out. You can at least see how I did and let me know if what you think about it. Thanks. Hey everyone, this is Greg Miller from Spin-Off Investing Simplified. I'm your host here at Spin-Off Investing Simplified's YouTube channel. And I appreciate you stopping by and taking a look around. If you appreciate this video or any of the others, please subscribe to our channel. We would love to have you along. We also appreciate your comments, and smashing that like button helps us out with the YouTube algorithm. We sure appreciate your time with us and hope you enjoy this video. Thanks a bunch. So the Brookfield Property Partners, or BPY postmortem. Now, make sure that you understand that this is not the BPYU postmortem, because I didn't participate in that one, but that one also happened concurrently as this one did, and it was kind of similar dynamics that somebody could have gotten into it. We'll talk about that a little bit as we go through this. So the tender offer was pretty straightforward. Brookfield Property Partners was offering $12 per BPY unit. These are not shares. This was actually units of the partnership. And so that adds some interesting things. In fact, that adds a tax issue for people that might have a taxable account or a tax-free account like your IRA or something similar to that. And this did occur concurrently with the BPYU tender offer that was for the exact same price from BPYU ticker symbol units as well. So it was super confusing with some of this. It took a little bit of digging to really understand it, which is really weird because this seems like a pretty straightforward tender offer where all you have to do is go out and buy the shares for less than 12, or the units for less than 12, and then sell them back at 12 or more. And because of the BPYU concurrent tender offer, a lot of people, I think, did not realize that this was also occurring at the same time. So interesting to see this happen. And then BPY units, I think they closed out this tender offer later. I actually sold out before the tender offer completed, and I'll show you why. So some considerations that I had as I went through this. First and foremost, there was Brookfield Property Partners I found out was associated with Howard Marks of Oaktree Capital, somebody that I really respect in the value investing world. Howard Marks is really good at the distressed debt area, and so I think he really understands whether or not something is worth something to purchase when you have a market downturn. So something to think about with this: buy the shares or the units at $12 per unit, and the expected real value of the company per the management team was closer to about $20 per unit. And so that's a significant jump over a couple of years. The company yields it something like, or the partnership yields something about 11% on its current assets, which is significant. Something that, I mean, when you're buying property in the real world, I'm an investor in real estate, and if I can get 10%, that's free and clear after all the investment expenses and stuff like that, that's a pretty good deal. And so just kind of interesting to see that. And then I can get it at a lower price with $20 per unit being my target of where it's going to be in 3 to 5 years. Not a bad gig at all. I personally needed a little bit more available cash in order to make this one worth it. I kind of thought, looking back at it, I wish I had another $3,000 to $5,000 that I would have been able to put towards it, and you'll kind of see why. So the results of the trade, this is pretty straightforward. I purchased 300 units at an average of $11.23 per unit by the 3rd of August. The price rose to over $12 a unit, the unit offer price. And so I ended up starting to sell those as it started rising above that. And so I sold 300 units at an average of $12.02 by the 18th. So in 3 weeks, I had a 7.05% return on my risked capital for a total of 122.28% annualized return. So that 7%, take it. I got another $200 that I can then plow into the next tender offer that I have out there. If I had enough to buy 600 units, say, this would be $400 in my pocket pretty easy with not too much work. And if you think about how big some of this company is, because it's a much larger capitalization fund or partnership, it would have been pretty easy to plow quite a bit of money into this. So anyway, interesting to see. I saw a special situations investing article about this when they were talking about it at about $11 per unit, which would have been even better. But you know, it is what it is. Sometimes you get lucky and you're able to get better ones. I think that's actually one of my lessons learned is I got really lucky that this one rose as quickly as it did, and I was able to sell out before the tender offer actually occurred, which made it that much easier. It lowered my risk profile because I was able to sell out at the price that I was expecting to anyway, and I was able to recoup my cash with an additional return. Some forward-looking considerations. Perhaps someone might look into this and say, you know what, a straight-up investment would be okay. You can collect that 11% yield dividend for a couple of years as you wait for the price to return to that $20 per unit assessed price by management. I would trust someone like Howard Marks. I know that he doesn't specifically focus on this, but I know that he understands the debt cycle, and he'd probably have a pretty good idea of what actually is valuable here. So, you know, it might be something to think about. My personal experience, though, is I think that my money is better suited in the next quick turn tender, because if I can do this again, I only need to do that twice in order to outperform that yield, twice in a year to order to outperform that yield up to $20 per unit for this over the next couple of years. So I'm looking for some, if I was at a point where I had lots and lots of extra cash and I couldn't find enough spots to park it, I would definitely be putting some money into this for the long term. So anyway, got lucky again on this one. Pretty excited about that. I would like to let you know that if you liked this video or any of my other ones on postmortems or tender offers or spinoffs, please smash that like button, hit the subscribe button. It makes it easier for me to continue to make better content and post good content here on YouTube, because it gives me better rankings in the YouTube algorithm and allows me to better meet your needs. So tell me what you think, and appreciate your work. Thanks. Take care, guys. As we finish up, we have one final note for you. This video was made for educational purposes only. Any companies mentioned in this presentation were discussed for educational purposes only. Discussing such companies and the specifics about them is for illustrative purposes only and not a solicitation to purchase them. We recommend that you conduct your own research and identify why you might want to own the company yourself before you commit any funds. We also recommend that you seek the services of a financial advisor that has considered your situation as your fiduciary. May your education here grow your knowledge, improve your personal investing performance, and give you the confidence to take control of your future. Thanks.